If you're trying to make sense of what the market is doing right now, you are absolutely going to be at a loss. And this is why it's important for you not to try to time the market. The only thing that you should do is invest in companies that you truly believe in, that you believe have a very good business case as to why it is that they're going to thrive and survive, regardless of whether or not it's a recession or not. You need to be making informed decisions instead of being out here gambling. What's going on is Anton from AntonDaniels.com, and I am absolutely always floored when I get earnings reports because it tells me the bigger picture and the sentiment of what investors are doing at large. And I'm going to tell you why. I'm going to show you why, right? Airbnb reports record breaking bookings, announces a $2 billion buyback, meaning that the more shares that they buy back, the less shares that they have outstanding, which then in turn adds more value to the shareholders, or at least it's supposed to. Let's deep dive into what their earnings reports is, right? Airbnb beat Wall Street estimates for earnings and posted revenue that met expectations for the quarter. So analysts at large, always on a quarterly basis, depending on who's reporting, you got PayPal reporting, you got a lot of different companies reporting. Analysts anticipate what the earnings are going to be. And then often at times what moves the market or what shifts the market is if that company beats, meets, or does not hit expectations. And then the company gives guidance for the upcoming quarters or the upcoming year. And then in addition to that, they give you the context as to why they were successful or not successful during that quarter. But let's go in and I'm going to break it down for you. Met expectations for the second quarter. The company also announced a $2 billion share buyback program, which you would think would increase the share price, right? Airbnb, like Uber, benefited from an increase in consumer spending on activities as opposed to goods. So people preferred to get outside, go places, spend their money doing things, traveling, getting different experiences than they did buying stuff that does not necessarily add value to their life. Okay. Revenue jumped 58% year over year to 2.1 billion, helping drive the company's most profitable second quarter to date. Most profitable second quarter to date. Revenue jumped 58% year over year to 2.1 billion. Now, this is what it amounts to. Forget all of that, right? I'm gonna break it down from a C student's perspective. Airbnb reported net income. So revenue is much different than net income. Revenue was 2.1 billion. That's how much the company generated as far as financially. When you remove all of the costs associated with it, remove all of them line items, the tricky accounting and everything like that, right? The net income, which is the amount that the company made in that particular quarter, was $379 million, up from a loss of $68 million a year ago, the quarter a year ago. So a year ago, during the same quarter, which is what people or analysts usually compare against in order to make an informed decision as to the direction of the company, they lost 68 million. They were a net loss of 68 million. This quarter, going into a recession, I see the airports full. When I go to a destination, I'm like, yo, with so many people in New York, what the heck is going on? We just did the Patreon meetup over in New York. Net income is up $379 million. They're making more money than they ever have. Record-breaking quarter. Company said it tightened spending at the height of the pandemic, which helped make it leaner and more focused, and that it's adapted its business to as travel continues to change. So what they said was, listen. Got to read between the lines, ladies and gentlemen. Listen, guys, we cut costs. We made sure that we did the right thing. And so we're a leaner company and we know how to do more with less. And we understand our business model. Let me tell you what they probably did. Of course, they don't have to maintain as much office space. I believe Airbnb was one of the companies that lean into the work from home model permanently more than other companies that believe that you need to be able to collaborate in person in order to get the best results out of employees. They cut their operating expenses. They made differences or changes to their business model. And no matter what the industry is doing, they're saying that we're prepared for what comes next. Okay. Airbnb anticipates record revenue during the third quarter, despite headwinds from foreign exchange fluctuations, specifically the weakening euro versus the dollar. It's a worldwide company. It guided third quarter revenue to land between 2.78 billion and 2.88 billion, ahead of Street Accounts $2.77 billion estimate. The company said it broke a single day revenue record on July 4th, which it says signals a strong summer season ahead. So when they report earnings for what we're doing right now, they're saying it's going to be a blowout time because I know everybody's saying it's a recession. I know it's dark outside. I know you can't necessarily pay your rent, but you doing your spending and you going on vacation and you letting that bag go. You letting that bag go. Second quarter, Airbnb reported more than 103 million nights and experiences booked. It's the company's largest quarterly number ever, but fell short of the street's estimates of 106.4 million nights and experiences booked. Gross booking revenue, which Airbnb uses to track host earnings, service fees, cleaning fees, and taxes, totaled $17 billion in the second quarter, which is largely the ways that they make money. That's up 27% year over year. While many companies are calling employees back to the office, long-term stays where guests stay in a home for 28 days or more remain their fastest growing segment. That's what we did, right? In addition to staying in a hotel, when we went to Miami and we just stayed there during the pandemic, we literally just booked in an Airbnb and we just booked for 3 months straight. Like we would book 28 days or more because it gives you the best rate. And we was willing to pay whatever the cost was to be in an open space. So that's growing 25%. Company said gross nights booked for cross-border travel surpassed the pre-pandemic levels. Daily average rates rose 40% when compared to pre-pandemic levels. Now, in all of this, right, and everything that we see happening right here with Airbnb, and they having blowout quarters and the best year ever, stocks are down. This particular stock is retracting, is down. Now, conversely, if you pivot for a minute and you do Uber, right, also in the travel industry, they reported earnings today. Loses $2.6 billion, but its stock soared anyway. People can't make sense of it. You know, the idea for most people is that when a company is doing really well and they're projecting growth and record-breaking revenue and all of this other type of stuff, that the stock would go up. They got a $2 billion share buyback. Uber lose $2.6 billion, but its stock soared. Airbnb is down. Uber is up. Let's deep dive, okay? Uber reported $2.6 billion loss, but outperformed Wall Street's expectations in the second quarter, sending its stock price up more than 10% in early morning trading on Tuesday. Tell me that ain't backwards. Net loss was mostly related to the company's investments in 3 mobility startups, Aurora, Grab, and Zomato. Bad acquisitions, in my opinion. Aside from those losses, the company saw a surge in growth compared to 2021 as travel continued to return to the state of normalcy. Company's gross bookings grew 33% year over year, while the revenue jumped 105% to $8.1 billion in the second quarter. Chief Executive Dara highlighted what he called the company's balanced growth and $382 million in free cash flow, all on a platform that's larger than ever, with the number of consumers, earners using Uber now both at all-time highs. So both companies are experiencing growth. Both companies are benefiting as a result of people wanting more experiences and they're embracing technology. Both companies did not have a profitable quarter. Now, the context is, well, Anton, they are doing acquisitions, so on and so forth. But analysts only care about the numbers. They only care about the growth numbers. They only care about beating analyst estimates and things like that. And so the market is going to shift because there's so many people that's gambling in the market instead of making informed decisions as to what it is that they need to invest in. Let's continue. Which company would you rather invest in, Airbnb and Uber or Uber? Investors cheered Uber's results despite the financial losses, sending Uber stock up 13.6% in pre-market trading. Investors thought the results were going to be much worse, so they cheered it, not because they had a blowout quarter, but because they were expecting much worse and the results was better than they expected. Wall Street was expecting a debacle from Uber with inflation eating into profits and demand softening consumer appetite for ride sharing. The quarter was a stark contrast, and Uber delivered a strong quarter across all metrics, which gives investors confidence. This turnaround story is alive and well, with Dara and company leading the way. That's the management. One of the things that I teach you inside of the Patreon is I want you to deep dive into exactly who the management is as far as the 8 things that I look for when I'm looking to invest in a company. That's the management. They think that the management is going to turn the company around, and Uber has largely been an unprofitable business for an extended period of time, despite the fact that you may like them. They like the management. They say that they're going to turn around the company, and they're not taking into consideration what's happening and all of the acquisitions and things like that. I am not high on Uber. I am not going to invest in Uber. I am not going to tell you what to do. I'm just going to tell you what I'm not doing. I'm not investing in Uber. And if I had to choose between the two, regardless of where the stock price is or how the market moved based off of their quarterly earnings, I would not personally invest in Uber. So you guys make your own informed decisions. You need to look at what happens and not necessarily the temporary growth, but instead start paying more attention to the business fundamentals as to why you should not invest in a company, and what the long term prospects are. I love you. I appreciate you guys. I need you to do me one more favor before we get up out of here. Um, this is crazy. Make sure you share this with your family and friends. We don't want to be successful by ourselves. Join the Patreon. Link is in the description as well as pinned to the top of the chat. We're going to continue to bust down this bag. We're going to continue to get to this money. And I am going to be announcing exactly where I'm going next for all of you that want to know. I love you. I appreciate you. I'm going to talk to you later. Peace.